Okay. Hello, everyone. Good afternoon, good morning, good evening, wherever you are in the world. My name is Tito. I work from the marketing team within Ingressive Capital, and welcome to another edition of our quarterly market trends report presentation. As usual, we're going to have Maya go through, I guess, the activities that we're seeing across Africa, fundraising activities, macroeconomic updates, different things like that. She's going to walk us through what we've seen in the past months, and some nuanced information from the past couple of months as well. And at the end of this presentation, we will be taking questions from every platform that you're joining us from. So we're live on LinkedIn, we're live on YouTube and Instagram. If you have any questions, feel free to drop them in the comments. And at the end of the presentation, we will get to it. All right, so I'm going to be bringing Maya on stage so that she can walk us through what we've been seeing. All right, Maya, welcome.
Hi, Tito, and thank you so much. Hello, everyone. If you can't tell from my name in the bottom corner of the screen and Tito's introduction, my name is Maya. I am the founder of Ingressive Capital, which is we have two funds, about 50 million AUM. We invest in pre-seed and seed stage companies in Nigeria, Kenya, Ghana, Egypt, and Morocco, mainly in the fintech, trade tech, and well-being sectors. I'm so excited to be here with you going through June 2025 market trends. If you know, we produce a report on this every month and go over this about every quarter. So you can track us live and asynchronously on the email that we send out. If you have any follow-up questions, always feel free to reach out to us on social media or reply directly to the email that we send. Looking forward to going through this now. All right, Tito, you can fire up the slides. So the market trends reports going over June 2025, a lot has happened. We're first going to go over the high level. So just as a walkthrough, we'll go over GDP construction. A lot of you, there are many founders on the call. And I know sometimes you can get so bogged down in the details of your business, from the product to your consumers, to even what's happening in the local market, that you can struggle to put your head up and look at what's happening with global federal interest rates, what is happening with inflation rates, what's happening with devaluation in the markets that I'm considering going into. And these are all really important things to keep top of mind because they will impact your business. If a country has extremely high devaluation, high inflation, consumers will likely have less disposable income to pay for your product. If there are major macroeconomic trends happening, it could affect the enterprises you're looking to target. So, of course, always feel free to ask questions. Right now, I'll go through the details. So, as you know, last year was wild. We had high inflation rates in most all of our countries. We had high devaluation. There were some defaulted loans, specifically in Ghana. There were some political unrest, specifically in Kenya, with the tension between the government sector and the technology sector, or the youth. And now we are seeing across the board stability. I think the name of the game of 2025 is taking a deep breath, pausing, grounding, and then continuing on the growth that we have seen from 2021 year and before. Egypt. So inflation eased to about 16.2% in June from 16.8. However, that extension could drive inflation in July. So a number of countries are seriously looking at tax reform. Nigeria has just stated some of the digital tax reforms that they're going to look forward to. Kenya, Egypt as well. Kenya has already enacted the EVAT program, and Egypt is close to follow suit, as well as a number of countries. South Africa, who just namely next, are going to be following suit. Inflation slowed to about 13.7% year on year, which is the lowest since December 2021 in Ghana. If you know anything about Ghana the last few years, they have had a change in government. They had their presidential election, they had their state elections. They sort of done a bit of a clean house and restructured some of the loans that they had defaulted on. And now the CD is back stable, the economy is back stable and thriving. So we're excited about the future of Ghana, and we're actively looking at Ghana again. We had taken a pause on them. We're back in the market. Kenya, inflation remained at about a 3.8 year on year. And the central bank cut the policy rate by about 25 basis points to 9.75 in June alone. As mentioned again, Kenya has successfully activated the the e-invoice program, which means to receive money from your customers, to remit, you have to have an e-invoice, which means the government needs to know all of the revenues that you're receiving as a business. So that has created an interesting policy that the rest of the continent has been following suit to look forward to. In Nigeria, no fresh data. However, the Central Bank of Nigeria seeks to pause. The MPR was held at 27.5% in May. And when it comes to Morocco, the Bank Al Maghrib kept its key rate at 2.25 in May and projects inflation will revolve around 2% over the next 2 years. As you know, Morocco has historically low inflation rates, sub 2%, comparable to most of the Western countries. And so we don't expect any major changes in our very stable Morocco. Now, to go over interest rates, as you all know, interest rates do influence inflation rates, and many of the central banks of the countries that we have been investing in are looking for increasing stabilization policies. Egypt held steady at 24%. They will likely begin an easing cycle starting in H2 2025. Of course, some of the international interest rates that we are seeing from the Western countries may influence the fiscal policy of our African nations. If you all saw in the news, Trump is seriously talking about firing the head of the Federal Reserve. And so we will see the impact this has in inflation on the continent. We will also see the impact this has on the driving of capital to the continent. When capital in the West becomes cheaper, when it's looking for new asset classes, interesting things are soon to happen. Ghana, 28% interest rates held in June 2025, after about 100 basis point hike in March. Kenya, 9.75, lowered its benchmark interest rate. And Morocco, 2.25, held in June at 2.25, saying that current borrowing costs are consistent with inflation, which we saw on the previous page as well. And in Nigeria, 27.5. As you know, Nigeria, Ghana, even Egypt have historically high costs of capital, high interest rates, and high correlated inflation. But as those things cool down, it is likely we will see a slight decrease in interest rates. Unemployment rates. So there is the official unemployment rate and then the unofficial employment rate. And right now we are going by the official unemployment rate. And this is for the active and capable workforce. So unemployment in Egypt is at about a 6.3%. It's at a multi-year low, which is really exciting, as we are continuing to see government pushing for privatization. So that means selling off a lot of the public assets, looking for new investors. Glad to see that is correlated with a very low unemployment rate and high employment rate, obviously. Ghana is at about 4%, expected to remain at 3.1 in 2025. However, some of the underlying challenges do persist. Kenya is at a 5.7%. It's low by official standards, but underemployment not reflected. Morocco is at a 13.3%. This is actually a decline. So interestingly enough, you have a country with very low devaluation, very low inflation, very stable economy. However, quite high double-digit unemployment rate. Nigeria is at about a 4.3% after redefinition of unemployment, and underemployment is at about 9.2%. Now we will go over the venture funding. So as I mentioned, first, we're going over the macro economy. We can obviously talk about those things as we reach the end, going over inflation, devaluation, what that could mean for future quarters on the continent. And now we're going to specifically transition into the venture sector. So what major deals have happened, where liquidity is happening in the market, where we anticipate new sectors to be happening. So June 2025 saw a robust rebound in Africa venture capital funding, making it the strongest month in nearly a year. Startups across Africa raised roughly 391 million in June alone, a sharp increase, about 70% from May's 225 million total. And that's also year on year. We're seeing about similar numbers in year on year growth. As you know, we had a market contraction in the the 2022, 2023, even 2024, we struggled to stabilize venture capital dollars flowing into the continent. And there was a lot of economic volatility, as there was a lot of sort of uncertainty reflected in investor behavior. Now, global markets are stabilizing, or at least the new normal is stabilizing. And so we're seeing that reflected in increased venture capital coming back to the continent. And something that's been interesting that we've seen from a number of institutional investors from the West is looking to Africa to diversify from some of the volatility happening in Western markets, which is a new one. In any case, getting into the details, Egypt saw about 5.8 million in venture capital funding. This is June alone. Nigeria saw 3.2 million, Kenya 92 million, Ghana 3.5 million, South Africa 6.2 million, and other top markets 224, almost $225 million. So notable trends in June 2025, as we mentioned, 391 million, about 70% up from last year. Very promising is what this means for the future of venture capital and what's happening for the rest of the year and what we can anticipate happening in the market the rest of the year. We saw also in Egypt, equity, or excuse me, in at large, equity versus debt. So there have been high equity funding reached about 365 million and around 950 million in total in H1. 79% increase year on year from H1 2024, driven by late stage and Series A, Series B deals. So not only are those the domestic funds that have been established in recent years to actively deploy across the ecosystems, TLCom, Partech, the likes, Norskin, etc., but this is also foreign investment firms coming back as active investors in our ecosystem. We've even seen it in our own portfolio. Some of this interesting movement is also happening in acquisitions, and finally we're seeing domestic acquisitions. So big unicorn African company acquiring assets across the continent for their market expansion and their regional sector expansion as well. So it's an interesting new trend we are increasingly seeing. And also there have been notes about a number of tech businesses that are going to publicly list on domestic stock exchanges. So we're seeing increased liquidity as far as in the technology sector in some of the African exchanges, and only more good things to come. Governments are very serious about facilitating liquidity as a driver for FDI, foreign direct investment, in our local markets. Additionally, venture debt and credit facilities hit a record high of 227 million in June alone, with Senegal's Wave securing 137 million. So we are still seeing concentration of venture capital dollars, both debt, equity, and even acquisitions in the financial services space. Fintech is hot, it's been hot, it's staying where it's at. Sector highlights: in June, funding was broad-based, showcasing a maturing ecosystem. Fintech remained the top sector by funding value, led by Wave's debt round for mobile money expansion and several mid-sized equity rounds. Egypt's Octane at 5.2, Kenya's Burn at 80 million, South Africa's Wetility, Africa's Wetility at 27.8 million. And Peach Cars, 11 million, health tech sector, Cara Medical at 10 million, and We Think Code, 2 million, but slightly quieter but present. Regional distribution: unlike May, when North Africa dominated funding, June's funding round was geographically diverse. We're seeing kind of a pan-Africa play. And increasingly, if you missed it, Uganda has been doing Ugandan government has been very supportive of technology and also bringing venture capitalists on a quarterly basis and sometimes more frequently to the country to drive commerce, to drive private sector activity. So we're seeing that reflected also in increased opportunities in the Ugandan market. So don't sleep on Uganda. Big things are absolutely to come. Now, the hub focus, noteworthy developments from around Africa. So we'll go we'll go region by region. Cautiously waiting for big exits. So something that we have noticed even is in our own portfolio, as mentioned before, is the regional players. So regional African unicorns acquiring very early stage to mid stage African technology companies in our portfolio. We have seen between 5 and 10 of our own portfolio companies receiving term sheets from potential acquirers, but these are not necessarily the big unicorn exits. These would be sort of mid-size, anywhere 100 million and below. And that's something we continue to see as a trend. Liquidity is happening, but the round sizes have become smaller and more practical and a function of multiple of either EBITDA or revenue. Nigeria's quiet month may be partially timing related. Several big Nigerian fintech rounds are rumored for late Q3, and partly due to macro factors. Investors are watching for policy clarity with the new government. We did see some recent big action with Kuda Bank, though. Nonetheless, the focus of Nigerian investment in June was a core enterprise and energy needs, aligning with government's push for local solutions. Egypt, major dip. After a record May, when Egyptian startups raised over 150 million, Egypt saw only 5.8 million raised in June. I personally think that's a factor of vacation times and time off. As you know, everyone is at the beach in June, July, August, summer months. People are taking their time off slowly or slowing down, easing on the deal side. I would be surprised if this continued in Q3 and Q4. We're actively seeing deals happening on ground, but going a little bit slower, easing into, we did just conclude the holidays. We are now seeing the summer months as well. So Cairo-based fintech Octane raised 5.2 million, led by Shrouk and Algebra, as mentioned. We also saw, so Octane offers a virtual fuel card and expense platform with about 2,800 Egyptian fuel stations serving about 1,600 companies and 250,000 vehicles. And of course, Nowloon, our newest portfolio company, an Alexandria-based logistics tech startup, secured 600,000 follow-on investment. Despite currency issues and high inflation, around 35% on average, Egypt's pipeline remains strong, with several startups preparing Series A, Series B rounds for H2 2025. Startups are prioritizing sustainable growth and regional expansion. And with Nowloon, we've made 3 investments in Egypt this year: Fab Connect, Sehatech, Nowloon. So we are very excited about the region. And this slowdown is not an indicator of low market opportunities. I think we will absolutely see things pick up in Q3 and Q4. Kenya. So if you've been watching in the news, Kenya is having trouble once again between reaching conclusions around their cyber security policies, around sort of government influence in social media, in regulating cryptocurrency, in regulating online marketing, and regulating sort of influencers and those who have online businesses. I think we will see more tech-favorable reforms coming up, given the unrest that some of these policies have caused domestically. So East Africa Dynamo with global links. Nairobi remains East Africa's tech hub, of course, as it has. However, once again, I don't want you guys to be sleeping on Uganda and Ethiopia. Of course, Tanzania has been vibrant, but I think big things are to come in some of Africa's fastest growing populations. Kenya startups collectively raised around 91 to 92 million in June, reaffirming Kenya's status as an innovative hotbed. Some of these top companies: Burn Manufacturing raised the 80 million we mentioned, Peach Cars, used cars platform, raised 11 million Series A, Persea Oil, an avocado oil processing plant, raised about $1 million in debt. Yes, these deals have been smaller. But mobility startup Bootpass received an undisclosed amount from Yango Ventures. So we're seeing a lot of quieter, smaller deals happening in the ecosystem, even ones that we are looking to participate in. Maybe some that have not been disclosed in the low millions. But big things are happening as per usual in the Kenyan market. Cape Town and Johannesburg, as in South Africa, remains a key part of the Big Four from a GDP perspective, from a recipient of venture capital dollars, from a location of liquidity events happening in Africa. Big things have been happening and will continue to happen in the South African market. South Africa led Southern Africa in June with about $62 million in venture capital funding coming into the ecosystem. South Africa brought in a combined $62 million, led by Wetility, a based solar energy company, My Next Car. So we're seeing a trend now for secondhand products. So typically when you see higher inflation rates, increased devaluation, market contractions as we've seen in the last few years, the general consumer market will look to more affordable platforms for buying their goods and services like clothing, food, etc. One of the ways to solve this is secondhand marketplaces. I've seen a number of these popping up in the last year from the clothing perspective, as well as increased in the car and lending side of things, and actually quite evenly distributed throughout the continent. So I think if you are considering building, if you currently have a secondhand marketplace, I'm particularly interested in those that are building across the continent. In any case, to continue on, Zero Carbon Charge, a Pretoria-based renewable energy startup, raises about 5.5 million. Salus Cloud, another Cape Town-based DevSecOps, raised 3.7 million. We Think Code, a coding academy, raised 2 million, and Open Access raised 1.8 million seed. We are seeing increased artificial intelligence machine learning solutions coming out of the South African market. And this is me purely speaking about the decks that I've been seeing recently. AI is starting to boom across the continent. I'm seeing regional focuses. Of course, we will get into Tunisia later on, but as you all likely already know, and maybe not, most of the liquidity events in the technology sector that have happened in Tunisia have happened in the artificial intelligence and AI tangential sectors, InstaDeep most notably. So we'll come back to that, but look out for AI as it pops up in our monthly report. West Africa. So to go over Senegal. So another one of those countries you should not be sleeping on. And Ethiopia, Djibouti even mentioned here too. There are our core top tech hubs across the continent: Nigeria, Kenya, Egypt, South Africa, as you know. And there are the tier twos. We place Morocco, Ghana, Senegal, those in the tier 2 cities. And then there are the ones that are coming online now, and incredible opportunities are starting to emerge. And the sophistication of the entrepreneurs, even in Uganda, I'm very pleasantly surprised by how advanced the entrepreneurs are in those ecosystems. Normally, when you have a new emerging technology ecosystem, the entrepreneurs are focused on pretty general, pretty region or even city-specific solutions. These guys are really thinking globally from day one, and it's incredibly inspiring to see. In any case, Senegal. Fintech powerhouse Wave secured a massive 137 million debt, as we mentioned before. So no large deals were reported in Francophone West Africa outside Senegal in June. Ivory Coast and Cameroon had a quiet month in VC, though Togo saw a small fintech raise of about 600,000. Ethiopia. In a significant development for nascent ecosystems, Better Up, an Ethiopian cybersecurity startup, raised $5 million. Djibouti, Djibouti, in a standout surprise, raised with their company Wingu.Africa, a Djibouti headquartered cloud and data center operator, raised about $60 million. So infrastructure plays first with the data centers, with the telecommunications core infrastructure, with the traditional banking. This is sort of technology ecosystem version 1.0. This is where we were in Nigeria almost, I'd say, 7 to 10 years ago. We're seeing this as new countries and new technology ecosystems come online. North Africa. Tunisia, so we're coming back to this AI capital of Africa, had a bright spot in June with 2 startups raising a combined 12.5 million. It's worth noting Tunisia's government in June also announced a new Startup Act 2.0 draft to further ease startup licensing and foreign investment, building on its pioneering 2018 Startup Act. It really was one of the first countries in Africa to establish a comprehensive startup bill that actually was quite productive. Thundercode, a Tunis-based, once again, AI startup, closed 9 million seed round. Thundercode, co-founded by notable African tech leaders, is building a generative AI-powered software testing platform. Cumulus Water, a French-Tunisian climate tech venture, raised 3.5 million seed. Cumulus manufactures solar-powered devices that are harvesting drinking water from air humidity. quite fascinating. I'd say Tunisia is generally always on the pioneering on of sort of the bleeding edge of technology innovation when it comes to AI and disruptive hardware solutions. Morocco and Algeria, no major deals happening in the ecosystem. However, Morocco prioritizes large strategic investments like BYD's EV factories and green hydrogen R&D from Germany's GIZ, funded by FDI or public-private channels rather than traditional VC. Moroccan startups, particularly in fintech and logistics, typically secure larger, fewer rounds like Shari's earlier raise and are expected to announce several Series A, Series B in later quarters of 2025. Algeria's ecosystem remains nascent in venture capital, nothing big noted in June. However, the startup law that they established in 2022, we anticipate unlocking not only venture capital, but new market opportunities for early stage startups in the ecosystem. Lastly, Algeria's government-backed 100 million VC fund is to kickstart deal flow. Not mentioned yet is Ghana's announcement. So I wrote an article recently about this. Ghana has established its own pension fund to exclusively invest in the technology sector. And we are seeing various African nations following suit. So Ghana, big ups on the pioneering government policy there. We're hoping to see some deployment over coming quarters. Curtain close on the research part. So in H1 2025, as H1 2025 closes, Africa venture funding landscape shows clear signs of recovery and even evolution. June's strong finish with nearly 400 million raises across equity and debt capped a first half that saw Africa startups secure 1.3 billion. As mentioned, that's up 78% from H1 2024. Investor confidence is gradually returning, driven by a mix of factors, improving macro stability in key markets, early signs of successful exits, and sheer resilience of African startups in addressing pressing needs. Going into Q3 2025, we are cautiously optimistic, not only about interest rates and VC sentiment coming into the continent. And I want to just add something, the unicorns that are actively investing across African technology ecosystems. And then lastly, we are very excited about liquidity in domestic public exchanges. We expect larger late-stage rounds to resume, possibly some 50 million growth rounds in fintech, e-commerce, and logistics. And more exits is seen more acquisitions, as we've seen in the Maxab, Wasoko, and Lasaka Bank Zero activation. Investors are also increasingly local. The rise of Africa-based funds and corporate venture arms, as well as Africa's wealthy family offices stepping up in the tech space, and, as mentioned, Africa-based pension funds actively and sovereign wealth funds actively investing in the technology sector. This all adds some liquidity to our ecosystem, partially compensated for any pullback that we've seen from overseas investors, who, as I mentioned before, just sentiment going across the ecosystems and understanding how they are perceiving Africa, both from a growth perspective and a portfolio diversification play. Africa is the stable growth compared to whatever has been happening in the Western world. So I personally am quite bullish on Q3, Q4 in our respective ecosystems, and look forward to not only more acquisitions happening from the big domestic unicorns acquiring Pan-African assets, secondaries happening as these big companies in Africa grow their Series A, Series B, and even Series C rounds, liquidity from public markets as well, and then in continued mergers as we see more consolidation in the technology sector. And fortunately, finally, I think founders have come to take their own financials seriously. In the years 2020, 2021, even up until 2022, we saw ridiculous valuations as well as financials that did not make sense, were default dead, and could not stand on their own 2 feet in the event that there was a market contraction and decreased venture capital dollars or no venture capital dollars coming into the sector or even their own business. Fortunately, even from pre-seed launch companies, I'm seeing a number of companies, maybe about 30% of what we're seeing, focusing on profitability. And in our own portfolio, we're seeing net positive revenue. We're even seeing like really, truly bottom line profitable businesses. I'd say almost about 50% of our Fund 1. So founders are seriously focused on building sustainable and enduring companies and continuing to scale across the continent. So with that, we will open up to any questions. If anyone has any questions on the macroeconomic side of things, as well as the specific opportunities, and I imagine that we have a number of founders on the call who are interested in asking some questions about their businesses or our process or perception of growth sectors across Africa in the coming 2 quarters. Top insights we couldn't have gotten anywhere else. The updates on North Africa was a real eye-opener. The way money moves can tell you a lot about the outlook of African business ecosystems. Thanks for sharing. Go Team Maya. Thank you very much, Hakan. Nice to meet you. Yes, happy to answer any more specific questions on the ecosystem. And as I mentioned, plan for continued growth. I know even in this quarter, Morocco did not list many notable investments, but they are focusing on, and as mentioned, they are focusing on macroeconomic policies that will further strengthen their currency and drive continued growth. If you have been looking, they want to become the electric vehicle capital of the world. They also want to be the top fertilizer producer of the world. They also are really focused on manufacturing sector, and the royal family is increasingly investing in technology and creating increased favorable policies. This is really a stable and mainly export dominated market in Africa. Hence why they have incredibly low inflation, incredibly low interest rates, incredibly low devaluation, very, very stable currency. Don't sleep on Morocco and North Africa at large. And then also, if you're an AI talent and you are looking to join an interesting company, I'd say Tunisia is the hotbed. Or investors actively looking for AI opportunities, Tunisia has been the hotbed, both in who's actually building what, the concentration, the ratio or the percentage of total investments versus AI-specific companies, and then also the major acquisitions that have happened in the market or the major liquidity events that have happened in the market have happened in the artificial intelligence sector. So keep looking at North Africa, exciting opportunities to come. Aside from the positive economic outlook in Ghana, what other factors make the country an investment destination now? I would say there are about 30 key criteria that we look at in order to actively invest in an African technology ecosystem. So some of the things that I would look at to determine these questions from an investor perspective would be how stable is the political sector? Do I have confidence in them building sustainable and stable policies over the next 4 years? Such that if I invest in a technology company now, there's not going to be a major market contraction or some radical devaluation that's going to negatively influence any company that I might invest in. So do I have confidence in the political sector, in the public sector? And that's been the biggest issue and the biggest question from Ghana is the last administration made a lot of very poor decisions, defaulted on debt, and then really was not in alignment with the populace. I'll leave it at that. And that had severe impact and of severe negative effects, both on the entrepreneurs actually trying to build on ground, as well as anyone who wanted to get into the ecosystem and start actively investing. Other things I would look at, and really easy and Googleable, or chat GPT-able, would be how much venture capital dollars are actually flowing into the technology ecosystem. Because if you back an early stage deal, you don't want to be the only investor that is participating in the company, because eventually you can't fund the company. You're not going to dedicate your whole VC fund to backing the life of this company. So you need to have other investors from whom you could potentially exit at a later stage through secondaries, or that could at least take over the deal as it comes to its Series A, Series B, Series C, and exit. So how much VC, of total VC, how much is actually coming to this ecosystem? I'd also look at the liquidity events that have been happening there. So how many opportunities have been acquired in the last year, et cetera. So I know I'm going into the specifics of what we actually look for, and your question was more around why is it a vibrant or viable investment target? I'd say high level, it's government policies and reforms and confidence in this new administration. I would say increased stability from the macroeconomics. If you're looking at interest rates, if you're looking at just general market stability and GDP growth rates, Ghana is stable and starting to grow once again. Also, it's an easy market to enter. or to add to your portfolio. So Nigeria is the big, hairy, scary, hyper-competitive market. I'd say Ghana is a more calm, more stable little brother. And I know the Ghanaians on the call are not going to like that I said that, but it is a smaller market. It is typically in other years a more stable market, which is actually kind of baffling to me that I think it was 2019, 2020 years, the Ghanaian cedi was the strongest currency next to the USD. And then you had all this radical devaluation that happened due to poor fiscal policy from the most recent administration. So in looking at the market, they're stable, easy to navigate, small, of course. The Ghanaian population is smaller than Lagos alone. But also, what is the government doing? They're stable as well. And then if you're seeing just general market sentiment, what is the world saying about Ghana? And so if you're looking at the comeback campaign, everything that has happened since the comeback campaign is there are increasing global investors who are buying assets or buying property in Ghana, that are relocating, that are having that be their second base. And so just in people actually coming to the country and actually raising families in the country. So it's not always, and one of my dear friends, Dr. Ola Brown, says this as well. It's not always, it's not a sure bet when there is increased population growth and when there are new families coming, moving, and having more children in the area. But it's typically a strong correlation between economic growth and population growth. So as we're looking at growing populations in Ghana, we so too are seeing growing GDP rates. So yeah, those are some of the general reasons why. Next question. I would ask how much you are considering foreign exchange when growing your business. I'm asking in the context of okra, when one of the reasons it closed down was due to high inflation late last year, not favoring the naira against the dollar. I found it interesting as an African venture. So I'm going to take this question in multiple parts. So there's one thing as an early stage founder that you need to be very mindful of, and that's your burn rate. And that's your burn rate in anticipation of a radical market contraction. Because what we've seen in Egypt, what we've seen in Nigeria, what we've seen across Africa is in 1 year, your dollar revenue, as in you receive your naira revenue and then you convert it to dollars, your dollar comparable revenue can go down by half, even if your company has 2x in naira revenue for that year. And I'm sure a number of you are painfully recognizing exactly what I'm talking about because of what has happened in the last few years in the local market. We have these companies that are experiencing incredible growth. They've grown 2x, 3x in a year. And yet we look on paper and it looks like they're failing. And we have to somehow explain and justify that. So one thing as an African founder, you absolutely cannot compromise on. Of course, make sure you have sound financials. But in the event that there's a radical market devaluation, which this happens every couple of years, make sure that you have cash in bank. If you stop revenue or if your revenue halves, do you have enough for 12 to 18 months in revenue? Minimum. We like our companies closer to 18 to 24 months in revenue or in runway, regardless of where they are at in the cycle. If you're down to 6 months or 3 months in revenue, you're not in a good place. So that's just one thing to pay attention to this, because it's not that African markets are going to devalue forever. It's that they happen every few years, and your business model and your growth needs to be in consideration of those things happening. The second thing is Pan-African diversification. So yeah, one market, as we've seen, Egypt and Nigeria as the two biggest tech ecosystems, Egypt with 100 million plus population, Nigeria with 200 million plus population. These are massive countries where you can build $1 billion business focusing on these countries alone. However, they are incredibly volatile as well, or at least have been in recent years. I don't want to say incredibly volatile. That's an exaggeration, but they have had a lot of trouble with inflation as well as devaluation in recent years. And fortunately, both countries have business-focused and enterprising political leadership. But in the event they had more traditional African leaders, what would happen in the market ecosystems? So I'm saying that to say, be thoughtful about Pan-African diversification. So if Okra was not just a Nigeria business, but they had maybe 20% of their business in Egypt, maybe 5% of their business in Tunisia, maybe 20% of their business in Kenya, and the remaining in Nigeria and Ghana, some combination, would they shut down? Or would they just focus on the other markets with more stable economies and businesses that were more prepared to adopt their solutions? So that's one other thing to explicitly keep in mind is is Pan-African diversification, at least 2 countries. We do not invest as a firm in sole geography businesses. Yeah, if you're an early stage startup, you're not going to launch in Ghana, Nigeria, Kenya, whatever from day 0. But there needs to be a clear plan over the next 12 months that's already on the map, and something clearly in place for how you will generate additional revenues across the continent. Or if you're in one geography, how exports are benefiting from foreign currency, so domestic labor and exporting that business, how that will be a core part of your revenue generation in your company. And on the note of Forex, what you were asking, that's actually something we see in a lot of businesses in Morocco, with them being so close to Spain, just literally a short ferry ride away, and having such a strong relationship with France. We see businesses in the Moroccan market export first. And some of them in Egypt, generally in like textile manufacturing, traditional industry there too. But we increasingly want to see businesses across the continent that are catering to an international consumer base. Why? Because you will only ever be on the right side of devaluation. You will only ever be benefiting from that currency arbitrage, as in you are benefiting from decreased operating expenses, because as currency devalues relative to USD, et cetera, your workforce or your labor costs decrease. However, if you are earning USD, euro, whatever foreign pounds, whatever foreign currency, you're only ever increasing the value domestically of each dollar that you earn from your customer. So things that I would definitely keep in mind are Pan-African diversification, and then so too would be the last point. And don't forget about also your burn rate. Make sure you're being thoughtful about your burn rate. Hi, Maya. Thank you for succinct presentation. Since you mentioned it, what yardstick do VCs use to value startups at the pre-seed stage? Is it revenue, users, partnerships, etc.? I think it really depends on which venture capital fund that you are working with. And fortunately, people think that it's this mysterious, raising money and finding out what the investor wants. It's this mysterious dance where they're not going to tell the truth. No, just ask. Just go on the websites. Like our website, literally, if you go to www.ingressivecapital.com or www.ingressive.vc, you go on the website and you see everything is just there. You can see every company we've ever invested in. You can see the geographies where we're actively investing. You'll see the stage that we invested. You'll see the sectors we invested. Nobody's hiding, even the check size. So I'm saying go on the website and do your research before reaching out to a VC fund, because inevitably they're not hiding anything. Inevitably, it's not like a scary dance where are they investing in public sector? Are they investing in private sector? Are they early stage? Are they late stage? What are they doing? No, just research first and just look at their historical portfolio. That should give you some indication. And so that's on one side of what you are responsible for, showing up to the meeting. I can't tell you the number of meetings that I have with founders where they come on the call and they're like, so tell me about yourself. So tell me about your firm. What are you guys looking at? And what are you guys doing? I don't know. Go on my websites. I literally, everything that I know, you can know too, because it's on our website. So just leaving that point there. Come prepared, because every interaction that you have with a VC is a data point on your capability and on how you handle situations. And if you come to the meeting and you're totally unprepared and you're asking me like, oh, what do you guys invest in? What do you do? I'm going to be like, this person doesn't research beforehand. Like this person does not come prepared. I'm wondering how they're going to be showing up to their customers as well. But to answer your question specifically, oh, wow. I just saw a very interesting question about Trump's policies. I'll come back to that. But what we look for in the early stage. So we as an early stage VC fund, and again, I can't talk about any other firm, and their stuff is going to be on their website or an easy Googleable research or an easy Google or an easy ChatGPT. We look for indications of product market fit. So we're in the pre-seed. So that means we like investing in companies that are valued 0 to 5 million post money. And we target about 10% ownership. And once again, we're in the financial services sector, actively investing, the trade tech. So any platform that facilitates commerce across Africa, and well-being, or like health tech. And so we look, again, initial indications of product market fit. So that could be users. So that means every month you have growing and retained users. And that could be individual users if this is a B2C solution, or it could be enterprises. And so, or B to small b would be small businesses growing. We want to see like similar to like consumer growth numbers, or maybe like half, 25% of that. And then enterprises, obviously, your growth rate will be a lot slower just because the sales cycle is quite a bit longer, and the CAC is generally significantly more expensive. So customer acquisition costs, you guys can Google that. But in any case, we want to see, are you getting LOIs? Are you getting like pilot confirmation? Are you getting like, what are your top 3 key metrics? Generally, you've decided what your top 3 most important key metrics are. And with most businesses, it's revenue, it's retained user growth, as in you don't just get a bunch of users and then they churn really quickly or they go off your platform, but you retain them, something around there. And then on the enterprise, it's are there pilots? Are there contracts signed? Are you testing out with businesses? Who's paying you? What are they paying you? So some metrics for your business around that. Mainly, once again, retention, retained users, maybe something to do with the actual product itself. So like minimizing latency, minimizing downtimes, minimizing product bugs, etc. I don't know. You decide what those top 3 are. And then we just want to see those growing month on month. And again, it's not that we need to see tens of thousands of dollars or millions of dollars monthly in revenue. This could be, you're growing, you have a couple $100, a couple $1,000, but it's every month it's growing. If it's early stage like that, we want to see like 30, 50, 100% quarter on quarter growth or month on month growth. We want to see significant growth in the very early stage, because growing from 1 user to 2 users is a lot easier than growing from 50 million to, 100 million users. So significant growth in whatever your top 3 core metrics are that you decide are your success metrics for your business, and just sustained growth over that. Next question, how do you see Trump policies affecting the ecosystem? As I mentioned earlier on the call, I've seen, he's talked about it a lot, but potentially firing the head of the Fed. And what that means, so Trump is a big business, commerce, enterprise guy. And so what he's going to want to do is decrease the interest rates in the US. And if he significantly decreases the interest rates in the US, that means investors are not going to want to keep their money in sort of safer assets anymore, in cash and cash equivalent. That means, and I'm also assuming that geopolitics is stable. So the only thing that really majorly changes is the interest rates come down, the markets stay approximately stable where they are right now. No more talks of wars, no more crazy, flashbang situations happening in the economy or geopolitics. So stability plus just a decrease in the interest rates. That means, as mentioned, U.S. investors are going to be, or global investors, which actually are significant investors in sort of the U.S. Treasury bills, these more fixed assets, they will move their money away from these currently high yield assets in the U.S., move their money away, likely looking for higher yield that will be in the tech sector, especially as we're seeing the incredible things happening with AI. So with that to say, with his policies, I anticipate something's going to happen with the Federal Reserve. He's getting very frustrated that interest rates in the U.S. remain between 5 and 10% and will remain. Likely, as far as user, like what are my mortgage and what are my lending rates that I'm being offered right now? If those significantly decrease, we're going to see a lot of market activity. But with that increased market activity, we're going to see increased inflation. That likely will have some ripple effects. I'd say a combination of decreasing the interest rates, which is inevitably going to happen, I think, plus some of these tariffs, if they are actually activated, maybe again, more flashbang policies, which are just conversations and just incentive to sort of restructure international geopolitical relationships and international economic relationships. But if we see high tariffs, decreased in interest rates in the U.S., I think there will be increased inflation. However, I too believe there will be significantly increased domestic and international economic activity. I also I think that Trump, as we have seen in all of his pull of USAID funding, in the sort of like restructuring of different Africa-focused government bodies, we are seeing the private sector fill in with the Bill and Melinda Gates Foundation and a lot of different sort of private nonprofits looking to the continent to fill the gaps of where these US sort of public sector initiatives were activated. However, once again, I do think Trump is very focused on the enterprise side of things and making sure that America has, there's like mutually beneficial relationships. And what I mean by that is I don't think there's going to be a resurgence of aid coming to Africa. I think that it will be solely focused on resource extracting relationships, countries where there's, cobalt, lithium, sort of some of the component parts to make electronic devices that we're so actively using now. Even with countries where there's active gold, et cetera, I think the US and the Trump administration may become more focused on building stronger ties with these resource-rich countries to exclusively focus on resource extraction, cultivation relationships. I also am very excited to see what happens with with Nigeria's increased crude oil production and refined exports. I think that over the next year, so as you know, Nigeria removed these fuel subsidies, which is we were creating crude, exporting it, and re-importing refined in euros, dollars, et cetera. Very expensive, significantly leading to increasing the debt that we have as a country, falsely passing low costs over to the end users, but in order to significantly increase the debt that the government is incurring. Since we've removed those fuel subsidies, since Tinubu floated the naira, since some of these other government initiatives have taken place, I would be really surprised if you've seen in the news recently, Dangote is focused on now building a port near his refinery and where he's focused on increasing production. We're also seeing talks of fertilizer, of diversification across the agriculture space, which I know is something big that Tinubu was focused on. I know I'm talking about Tinubu, you were talking about Trump, but I'm curious what's going to happen on a global platform as Nigeria starts becoming a major producer of and a major exporter, an increased major exporter of refined crude oil and natural gas. So big things are to come in the Nigerian economy. And I think that that will only strengthen relations with the Trump administration and with the US at large. So TLDR, I think there will be increased inflation in the US and that will have ripple effects through the rest of the world. But with that, or coming first, I think there will be the cost of capital will decrease, and it will move away from sort of the safer sectors and start again going into venture capital. And we'll see sort of a resurgence into the venture capital and technology space at large. Curious about tech investment opportunities in Kenya. What makes the market stand out compared to others in Africa? Are there specific sectors like fintech, health tech, or e-commerce? So I would say financial technology in general. I would say because the infrastructure is a lot more sort of stable than elsewhere, than I'd say even West Africa. So Egypt and North Africa, you have incredibly stable infrastructure, beautiful roads. If you haven't been to Cairo, you really should go. Similarly, in Kenya, really built out the infrastructure, have focused on building out the infrastructure. And what that actually means in practice is you can have successful e-commerce companies where each player in the pipeline can focus on their own sector. You have a logistics player, you have the SME businesses selling products, et cetera. And so, yes, e-commerce is interesting. Financial services at large are interesting. And of course, the sort of impact focus. So climate tech is huge in Kenya. So too are sort of more impact focused business models, or like the double and triple bottom line business models that we're seeing in Kenya. What makes it so interesting? It's got a larger population, and at about 53 million. And then and that's compared to sort of Nigeria's 200 million and Egypt's 100 million. So it's got a larger population. It's got a higher GDP, and it's a key recipient of venture capital dollars. And so what I was talking about before, of you have early stage companies as an investor, you don't want to be the only one backing an early stage company, or one of only a few that might be potential relevant later stage investors, because that means that your company is more likely to die, because raising larger rounds in the later stage is likely an essential piece of the puzzle of building a high growth technology company that has a successful exit. So you want to make sure you're building in an ecosystem where there are lots of other venture capitalists, so you can exit through secondaries, so somebody can take over the deal at growth, et cetera. Kenya is a key recipient of venture capital dollars in Africa and has been. Also, when it comes to tech policies that focus the investor, they have a lot of great programs. Not only do they have a really great investor VC visa, Like if you are a venture capitalist, if you are an investor at large, if you are just, actively in the finance space, they have really great visa policies, and as well as tax incentives. As far as for an entrepreneur building on the ground, it's got a more stable economy. The shilling, yeah, there was similar devaluation to sort of the rest of Africa and a lot of the world during the 2022, 2023, into even 2024 period, but things have really stabilized. As well as they have a very diverse economy, agriculture, services, ICT, M-Pesa, Safaricom, as you guys know, in the sort of ICT space. That diversification means that if they're so say you have a country that's really focused on producing and exporting one commodity, and that's how they get their foreign exchange, and really that's how they sort of stabilize their currency. And say that there's a significant change in that commodity on a global marketplace, then that can really affect the success of that economy, both from a devaluation and just like a market growth and economic growth perspective. It can really affect it. And because we see such diversification in Kenya, that makes it quite a bit more stable. I'd also say because they have financial services infrastructure established already, it's easier to build additional fintech products. Of course, that also creates a moat. There's not as much that you can build in the sort of version 1.0 sort of financial technology infrastructure because it is so built out, but really innovative founders, remittance plays are still possible. Savings and wealth building tools are still possible. There are still a lot of new market opportunities, and it's nice to have some of the sort of infrastructure already solved. So that's what I would say on the Kenyan market. I think we have time for one more question. Hi, Maya. What do you think will happen to stablecoin rates, local fiat rates, post-government regulation of virtual asset service providers? That question is out of my area of expertise. I would say I do see a lot of African businesses that use stable coin or use cryptocurrency, some element of cryptocurrency, as their sort of their go-between currency when you want to exchange fiat to fiat and you don't want to use the banking infrastructure and go through that expensive and cumbersome process. Seeing increasing businesses showcasing business models where it's their sort of intermediary currency is either stable coin or is Bitcoin, etc. However, you eventually at scale will have liquidity issues with the off-ramp in those solutions. Your specific question is, what do I think is going to happen to these currencies once sort of virtual asset policies have been established? I'd say in Africa, with these policies being established, I don't really think it's going to hurt. I mean, and I'm talking about USDT, USDC, Bitcoin. I'm talking about these. I'm not talking about like e-Naira. I wouldn't. I don't know enough about this space, but that's not where I'm putting my money, and that's not what I'm betting on. But I don't think that the volume. Yes, I know. Nigeria ranks highest in peer-to-peer Bitcoin transactions and its engagement and usage of cryptocurrency, and I know that's definitely growing across the continent. But as of now, I don't think the volume. The impact on volume caused by these, like whatever perceived international policies, will have a material enough effect on international demand for these products, where it's like really like even if say Kenya, canceled the usage of Bitcoin, I'm not sure that I'm certain that Bitcoin wouldn't go from 100,000 plus to 50,000. I don't think that's something that you have to be concerned about. And then we can see that the Western administration, the US administration, and various other Western administrations are major proponents of cryptocurrency in general. And so I'd say I'd pay a little bit more attention to, assuming you're not talking about like e-shilling or like e-Naira or e-CD, that you're focused on USD, USDT, et cetera. You're focused on cryptocurrency, you're focused on Bitcoin, and that being sort of exclusively the sort of more tried and true cryptocurrency products. I would be focused more on what the major top markets engaging with those products. I'd say I'd be more focused on what their governments or the policy of their governments around cryptocurrency. And once again, as we've seen, the US market is a very big proponent of Bitcoin specifically. And then very lastly, how is the business environment in Uganda conducive for startups, and is it similar to Kenya in terms of markets and policies? I don't want to speak like I'm an expert on Uganda. We are just getting to know the government and just getting to know the economy. We did just participate in the Ugandan business conference that recently happened, specifically targeting the tech sector. And what I can see on ground is one, it's a top as far as a population growth. So if you're just looking at the macro trends, you want to invest in countries where there's significant population growth, where it's going to be a key it will experience key population growth as far as regional and globally. Uganda is one of the countries. Uganda, Nigeria, and Ethiopia are three of the countries that will experience some of the most significant population growth between now and 2100. And so, again, what I mentioned before, there is not it's not a guaranteed that significant population growth will lead to significant economic growth, but they're generally correlated statistics. What I mean by that is if Uganda is going to be a top growing population across Africa, likely there will be significant as well economic growth that's happening domestically. A lot more bodies in the labor force, a lot more activity. And so that's from a long game perspective of just looking at it as a key growth market. Now, if you're looking in the short term of what's happening with the government, we see on the continent, it just makes business growth all the easier when government is aligned. If you see some of the policies that have happened over the last decade in Egypt, with them mandating that banks lend to the technology sector or invest in the technology sector, them mandating public capital to venture capital ecosystems, them facilitating their public exchanges and other public exchanges for the technology system and technology ecosystem, them creating all these sandbox policies tied to their central bank to make business building all the more easy. So we're seeing similar trends in Uganda. So of course, that's not going to guarantee that there's going to be major economic activity. But if you have a government that's very much in support of not only investing capital, not only bringing venture capital funds, active investors to the ecosystem to see pitch competitions, to see active business building, just when you have a government that's in support of commerce and really, really wants to see growth into the technology sector, great things are to come. And so we're excited about Uganda because of the size of the population, the growth of the population, the GDP construction at this time, and how supportive the government has been in promoting venture capital, foreign direct investment, and just business growth at large. So with that, we've got to wrap up. Thank you all so much. As you know, you can reach me on Instagram, LinkedIn, X. I'm on all platforms. I'm happy to answer any additional questions that you have. And also, if you want to shoot me an email or a DM, I can include those questions in the next monthly market trends reports. Or, as you know, I like to create some videos. Always happy to create some videos for you guys when the next ones come up. So thank you so much and have a wonderful rest of your day. Bye.